welcome to this edition of the Litigation Quality Patent Podcast. This is Craig Thompson of Thompson Patent Law, and this is a very special podcast because we're joined by Jeff Holmberg, who's a manager and a CPA with Froehling Anderson out of the Minneapolis, Minnesota office, and he's going to teach us something very important that for inventors and innovators who are seeking patents and are doing R&D. And we're going to talk about the very important R&D Tax Credit program that Jeff is an expert in. He's been doing that for a long time in his career and specializing in that area on this R&D Tax Credit. And it's especially important, I think, to people who get patents because we want to pay as little to the government as possible, if that's the idea here. When you're doing development and research and development. So, Jeff Holmberg, welcome to the program.
Thank you, Craig. Thanks for having me.
It's an honor. We've been friends for years, and this is going to be a real treat for me. So tell my audience about what you're doing and share with them so that they can figure out how this R&D tax credit might benefit them in their businesses. So I'm sure they want to hear about it. Why don't you just tell us just give us an introduction, Jeff, a little bit about yourself and the R&D tax credit program and kind of let's wade into it.
Sounds good. Well, as you said, my name is Jeff Holmberg, and I work at Froehling Anderson, which is a full-service CPA firm. And when I started here about 13 years ago, one of the partners came to me one day and said that they needed someone who was really organized and detail-oriented to help companies take the R&D tax credit. And they thought that I'd be good at it, so they asked if I wanted to try it out. And I didn't know a thing about it, but I said I'd give it a try. And no time at all, I fell in love with it because there's a lot of thankless jobs in public accounting, but the R&D tax credit is not one of them. I feel a lot of gratitude for my clients. I love that moment when especially when they're just getting on board with the program, when I go out there and I help open their eyes to how much they can really save against their taxes with this thing. Because think of all the ways that business owners love trimming expenses, but I think there's no expense more than taxes that they love saving money on.
Yeah, so they can spend more money on patents.
Exactly.
Whatever works. I love the enthusiasm. You fell in love with the R&D tax credit. That's I want to invent something and work with you. So tell us about what is the program and who's it? Is it a state or federal, and how does it work?
Well, it started out as federal, and the majority of states, I think roughly 40, give or take, all have some version of the program as well. But the R&D tax credit program is the government's way of giving companies an incentive to stay on top of changing technology and just to use technology to make things that they've never made before, or maybe take old things they've already been making and try to make them a little better, or even just making the same old products they've always made, but just coming up with a better technological way to make them, saving money or time, or making them better, faster, stronger. And I want to point out that there's this misconception out there that a lot of people think that in order to qualify for the credit, that you have to be making something that's new to the world, that the world's never seen before. But you really don't need to clear that hurdle. It's enough that you be making something that's new to your company. So now imagine that it's not new to just your company. Imagine it is new to the world and that you're going to go take a patent on it. I would think that a project like that would be pretty easy to qualify for this credit. Really?
Okay, that's something I didn't realize. So doesn't have to be patentable. It just has to be novel to your own company. Can you give some examples or some more stories of something that wasn't even patentable, but you could still benefit from the credit?
Sure. Well, a lot of my clients are machine shops, and they're custom manufacturers. It's not like they came up with a new product on their own. They're in the business of coming up with processes for making other people's products. So, like up here in Minneapolis, we had a new Viking stadium built not long ago, and one of my clients was a metal shop and was asked to make create a process for creating several thousand metal parts that would be used in the frame or in that part. My client didn't guarantee that they were going to work in keeping the building sturdy. Somebody just came to them and said, "This is the product I need. Can you create a process to manufacture this thing at a allowable price point?" So what we took a credit on was not the new product, because it wasn't their product. We took a credit on the time and effort that went into making that process, and then, of course, ultimately manufacturing tens of thousands of those units.
Well, so even if something isn't patentable, I can still send them your way to get them to save some money. So who should be thinking about using R&D tax credits? Who should be looking into this? When do you know if you need to make the call to a guy like you?
As a cheat sheet, I'd say if you happen to be in one of the industries that we see as ripe with R&D opportunities, then that would be manufacturers and architects and software developers and even professional engineering firms. But really, it would be any company that has to use technology to make products for their customers. And especially if they're getting a patent on their ideas, then that's a good indication. Or if someone has an engineer on staff or someone like an engineer, those are good indications too.
So how much money could someone actually benefit using the tax credit program with the guidance of a CPA like yourself?
Well, at the end of the day, the credit is driven by R&D spending. That is, you look at all the projects that you have that would qualify as an R&D project under the tax code, and you ask yourself how much you're spending on those projects. That spending usually comes in the form of wages that you can associate with the projects, or supplies that you put at risk in order to keep the idea moving forward. Or sometimes you got to go pay outside specialists to help with something because you don't want to have your own in-house program, or you just want to pay somebody else to do it. You add up all those expenses, and some percentage of those research expenses become a tax credit. Now, of course, everyone wants to know what that percentage is, and it varies. If you're spending more on R&D than you did in the past, it'll be better than average. If you're spending less on R&D than you were in the past, it'll be less than average. But as a rule of thumb, when we're just getting into an engagement, we'll usually ballpark it at about 10%. So simple example, if I'm looking at a client and I think they've spent about $100,000 that can be traced back to R&D jobs, then we'd go into the project hoping that there's about $10,000 of tax savings at play. I could tell you that in our own client base, we've got clients all across the map, or like at two extreme ends of the spectrum and everywhere in between. I'd say at the smallest end, we got people who have a little side business working out of their garage, and they're just thrilled that they're about to save $1,000 on their taxes next year thanks to this credit. But then we have companies on the other end of the spectrum who are saving about $600,000 every year on their taxes, and then everywhere in between.
So what are some common mistakes that the person who's thinking about a tax credit should become aware of before they get into it? Or how do people mess up? Or is it possible to is it being too late, or not classifying or tracking your expenses? Or how do people miss out on this opportunity?
Well, I'd say the mistake I see the most often is people being too conservative, and sometimes that means that they know or they believe that the credit is something they could be taking advantage of, but they're just worried that the more tax benefits they get, the more the IRS is going to want to go after them, and so they just leave money on the table and don't even take the time to find out how much money they're leaving on the table. Or sometimes being too conservative plays out another way. Maybe they're taking the credit, and I sit down with them and I get the impression that maybe they should have a pretty high amount of R&D time, and then later when they say, "Oh yeah, let me give this some more thought, put the numbers together," they send back a number that's like a tenth of what I thought it would be, and then I got to dig a little deeper and say, "Well, why is it? Did I misunderstand?" And they're like, "Well, no, we just we wanted to lowball it here, here, and here," and suddenly that all compounds, and they're just really selling themselves short. So sometimes that's a big challenge of my job, is just helping them understand how much they're really entitled to, and helping them expect what a fight with the IRS would look like and how they would come out of it.
Does this raise a lot of flags at the IRS when you take the credit?
Is it a red flag? I would say that I wouldn't say that taking the credit is a red flag with the IRS. I would say that going back and amending the last 3 years of tax returns, that's as far as you can go back, to claim a bunch of R&D credits, that's more of a red flag with the IRS. In fact, at one point, not that many years ago, the IRS had a rule in place that said that if you were going to do that they wouldn't send you your money until they had looked at every one of those filings. And turned out they couldn't keep up with the workload, so they took that rule away. But that gives you an idea of the scrutiny that they would put into just going back and taking lots of years at once. But I think their hands are so full doing that they the people who are just taking the credit for the first time just in this year are going to be further back in line to get looked at.
So it's not necessary. You can just take it previous tax year. You don't have to go back and amend necessarily.
Exactly. So, we're in early 2019 here, so I'm going to have a lot of clients who are taking the R&D credit for the first time on their 2018 tax return. And, when the dollars are big enough, like if somebody's going to save over $100,000 a year, and you can go back and do that for the last 3 years, then yeah, $300,000 is a pretty big prize to go after, enough where you might not mind a fight with the IRS, or you might not mind the risk of the extra scrutiny in order to go after it. But it's our job to help figure out what sort of benefit are we looking at, and what would the cost and the risk be.
So does it sometimes make sense to go back and try to bundle up a 3 year development effort, because it's kind of spread out over that time and it really looks attractive when you go kind of put it all into one year when you file for the credit? Is that a strategy you would sometimes use?
Well, when you say put it all in 1 year, I would disagree with that. Like, let's use an example of a company who has, let's say that all their R&D spending comes in the form of wages. They've got a bunch of engineers, people who do nothing but R&D, and they're spending $1 million year after year on it. And let's say that works out to $100,000 of tax savings a year. What I'm saying is we have some options. We could just jump in and say, okay, now in 2018, we'll just start taking the credit this year. We'll take that $100,000. Next year, we'll do another $100,000, and so on. That's plan A. Plan B is we also do that, but then in addition, let's also go back 3 more years and take the $100,000 a year from those years as well. And as far as whether or not that's a wise move, it's as long as the client's following our recommendations for how we think or how they would defend that if they needed to, and the client's willing to accept the risk, then it's a good idea. If you're the kind of client that is going to lose sleep over that, knowing that the IRS is going to probably send you a letter asking some questions, then maybe it's not the best move for you. So
definitely you need professional advice. And if you're going to try to attempt that, I'm sure they need to come talk to you before they do the 3 year going backwards. But so you can go backwards a little bit. Is 3 years the maximum? You can go back?
Right, and that's not unique to the R&D credit. It's just anytime you decide that you want to go back and fix something on a prior tax return, you have to make sure that tax return is still within a 3 year statute of limitations to change it.
Yeah, could you just share, to just help people maybe relate to stories or war stories or, examples? Do you have any examples that you can share with us of, types of businesses and situations that have benefited or maybe didn't make sense? Can you share with us a couple quick stories just so people can relate to it?
Sure. Well, I'll be happy to tell you a couple success stories of people who took the credit and kept it. But actually, a minute ago, you said something about the need for having a professional involved. So I actually want to tell you a quick story about a company that did not get a professional involved. One day, one of the partners here came into my office and told me about a friend of a friend, someone out in Silicon Valley who worked at a company, and they were a startup. They were trying to manage their expenses pretty closely, and they said, we want to take this R&D credit, but we don't want to, pay for a specialist. Like, we got a CFO. That's their job. Let's just let our CFO find out what the rules are and, put the responsibility on them. So this CFO did their best. They looked into it, and they claimed enough in research spending that their tax savings were, I think, like $300,000 a year. And then the IRS came in and took a look and said, well, we got a problem here. Yes, you're spending money on these things, but your research is funded. You're going to get paid or reimbursed for these research efforts, whether you succeed or fail. So none of it qualifies for the credit. And now this company's got like $1 million tax bill plus the penalties and interest because they tried to take a shortcut. Yeah, their credit got disallowed. Well, I mean that's the worst part is that they claimed the credit. They paid in less than they really owed in their taxes. So then the IRS comes back and says, you didn't pay us enough taxes for the last 3 years. We need that money back.
Okay, so definitely get professional advice from a guy like Jeff. So.
Yeah, there's just there's so many moving parts here. You really got to be well versed in what doesn't count, and even when it comes to something like I said that wages count. Well, whose wages? The person who's rolled up their sleeves and is holding the tools, or what about their assistant? What about their supervisor? What about the CEO? What about the guy sweeping the floor? Like how many people can we attach to these projects? And there's so many tax code regulations that talk about that. You got to be familiar with them all. So definitely use a professional. Otherwise, could tell you a story about when it did work out. Most recent example, I got a phone call not long ago from the owner of a fairly small company. He had about 8 employees on the payroll, and they make custom machinery for large companies like GE. Okay. And this gentleman had heard about the credit before, but he was pretty skeptical about how big the benefit would be and whether it was going to be worth the risk. So I drove out there and met with him for a few hours free of charge. That's just how we typically approach these opportunities. And by the time I left, then he and I both felt pretty comfortable that the tax savings would be at least $90,000, and we had a plan in place for how we would defend it if the IRS was going to ask questions. And ultimately, by the time we turned estimates into real numbers and had the documentation together, then the credits ended up being about $130,000 just for that first year, and we're thinking it'll be similar amounts in the future.
Wow. That's fantastic. I need to be able to put some of my clients in touch with you. Tell us how they can reach you.
Well, I'd say if you go to our website, www.fa, like Froehling Anderson, -cpa.com, then you can learn more about our firm. Or if you want to skip to the R&D knowledge specifically, then just add a backslash and the letters RD to the end of the website there, and you'll get a link to download an ebook with some more information.
Okay, great. Well, we'll definitely put a link to that in our upcoming newsletter, and hopefully an article from you with a bit more information about the R&D tax credit. So this has been very informative. I learned a lot. Thanks a lot, Jeff. I really appreciate it.
Oh, thank you, Craig. Thanks for having me.
Okay. All right. That's it for this edition, a special edition of Litigation Quality Patent Podcast. Craig Thompson here at Thompson Patent Law. Have a profitable day.